Michael Carnevale is Branch Manager and Financial Advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Conversations with Mike Carnevale. I'm Richard Morco, your host, and we will be discussing where the economy is going recently. As you might have noticed in the last few sessions, Mike had what do you call these things again?
Clipboard.
Clipboard, like I did. But the market hasn't been that good. He had to hawk his. So now he just has the two papers in front of him. But he will soldier. He will soldier on.
I will continue to make an effort.
He's not. The man rises to the occasion.
Yes, definitely.
However, he will maybe not be driving back to Auburn. He will be collecting cans at the side of the road. We're going to get him a clipboard come hell or high water. Anyway, it hasn't been a bad month.
Excellent month, really.
If you own stocks, it was good.
It was good. August ended. August usually is not a great month, but it ended at an all-time high.
It usually is. You know, it's 10th of 12, but boom, it's up there.
Yep.
And coming back, following into September, we're still kind of riding that.
A little bit.
So we'll all be getting rich until we aren't.
Correct. Till we pay it all in taxes.
Of course, inflation eats it up a little, but we'll get to that a little later. Let's just enjoy this. Let's celebrate.
Yeah,
all right.
Makes sense.
Yeah.
Yep. And it was pretty good because August kind of was, the headline would be Dow closes at all-time high on the last day of August, but we forget that during that month we had that big 1,000-point drop, and that's when people started to come out and say, aha, here comes the drop. Well, and you recovered it all and then some.
You have made, before we came on, he made the point, we have all these little boom, and then they go away. And then I said, well, how about in, what was it, 1932? That boom didn't go away for a long time.
Right.
But we haven't had, we've had some bad little events.
Yep.
The Great Recession, things like that. And they're painful, but they're not forever. They're not long-term events. They go.
It seems like the stock market has recovered quicker than people's sentiment has.
What? When you say that, the people, who are we talking about? The people, the average person who...
Yeah, I think the average...
the person who's in the market itself.
No, the average person. You read all these surveys who people say, oh, X percentage say the economy is in bad shape, and yet none of that has been affects the stock market, it seems like, which is kind of really amazing. You have a 1,000-point down day toward the beginning part of August, and you not only recover that, you recover that and then some.
We have.
And what can change in 2 or 3 weeks? Really nothing, right? Mm-hmm. Yet the market seems to think that it can. And so nothing has really, whether it was the uptick there in inflation, whether it was the political situation that's going on, none of it seems to really stick to the market. It may have a day or two effect, and then it sweeps it away.
When you say the uptick in inflation,
Yeah.
the uptick in inflation, maybe there's a slight flip, but the uptick has been slowly going on
Yeah.
since the Nixon administration.
Right.
And it hasn't stopped.
Mm-hmm.
And it affects everything almost as much as the stock market. The stock market is good for everybody who has at least a 401k or a personal savings goal that keeps them in it over time.
Mm-hmm.
But there are millions of people out there, maybe probably the majority, who don't have a 401k.
Right.
So
yeah.
how does that affect everything? Why do we just wait for them to come with the pitchforks?
No, but you would think that if a majority of the people are not participating, that would somehow affect the market, because it would affect the market, well, in terms of company profits and things like that. So it doesn't seem to have had the...
Yeah, it doesn't affect the market.
No.
But does it affect society as a whole? I mean, inflation, much of the market, we have this discussion, that, what it ended at, 41,563, that month ending, big. You say that's half of that is inflation.
Yeah.
I disagree.
Okay.
And I would say it's probably more, 80%.
Well, you look at, I'm looking more at, if you look at like the long-term returns in the market are 8-9%. Long-term inflation has been around 4 or 5%. So that's how I'm coming up with about half of it is inflation.
That's fair enough. I see your point. That, I understand that, but the everyday person who is not in the stock market, they've been devastated. It's 90% for them.
Right, because they're not getting the
Yeah.
8-9% gain.
So the question is, got to watch it, make sure we see those people with the pitchforks, we can avoid them.
Right,
Okay.
right, yeah, no question about that.
Well, I might say it's his fault,
Oh.
so I can get away. But
Okay.
I mean, that shows you what a personality.
Yeah.
Yeah. But I know you're going to try to beat me to that. All right, technicals.
Okay, so obviously,
Oh, I want to get to the yield curve. In the last few days, everybody has been saying the yield curve has turned around. What has happened?
Well,
And maybe you give it 1 second or 1 minute. Tell the people what the yield curve is and
well, the
why
yield curve,
it's almost, for years it seems, it's been inverted.
or it has
What does
been,
that
yeah,
mean?
recently.
And turning around, does it really mean anything if it hasn't meant anything up to now?
No, generally an inverted yield curve would signal some type of tougher economic times, maybe a recession or whatnot. But we've seen with some of these other economic indicators that this time it hasn't worked out.
No. Well, like I said, could you explain to people at home what exactly is the yield curve?
Okay, so that's the relationship between the 2-year Treasury and the 10-year Treasury. And so in the normal times, right, they would pay you more to go out longer term. So you have a higher interest rate.
Right.
When it inverts, where the higher interest rates are at the shortest maturities, that's kind of an indication of, well, what does that tell you? It means no one's willing to give you a high rate long term because they think rates are going to be lower. Why would rates be lower? Generally, rates are lower if you're in some type of economic tough spot where you have to keep lowering rates to try to stimulate borrowing
Okay.
and to try to ultimately stimulate some type of growth. And so that's what's been the case for a couple of years at least. And it's getting very now close, very where the 2-year and the 10-year are almost equal now. So that would kind of hint toward better times, not times that are worse than they are right now. But like with a lot of these indicators, it's never, 100%. There can be other things some that come to mind, some that you don't know until they happen.
But people do talk a lot about the yield curve.
Right, you want to, ideally, a normal yield curve is positive.
So this is the first time in a long time it's de-inverted.
Yeah, for this long a period, a couple of years.
Now the times are abnormal.
Right.
Okay.
Yeah. But we've seen that in some of these other economic stuff too, where it's what should have happened has not happened. Or historically what would happen.
Well, so when you say should have, that historically it has not happened,
Right.
but it should have happened. Is that what you're
Yes, yeah.
If it never happens or doesn't happen, maybe it shouldn't happen.
Or there's something else going on.
What is it? Yeah, we want that next
Yeah,
month.
okay.
We want that. What's that?
Okay. I'll try to find
You've got
it.
some work.
Yeah,
When you find your clipboard,
yes.
you'll also
It's
find that.
probably clipped to that.
Yeah.
Yeah. Yeah.
Okay, all right. We can now talk about the technicals.
Okay, so, technical indicators kind of take a snapshot of where things are today compared to where they were at some point in the past. And they've gotten weaker than they were a month ago, and that makes sense because the stock market has gone higher. So, volatility is about the same as it was a month ago. Percentage of stocks above their 52-week average is about where it was a month ago. But the stochastic oscillator, which is the...
Well, I had one of those when I went in for had my back looked at.
Let me ask you
They
something.
put the stochastic oscillator right there.
Was that fully covered by insurance?
You
had a
I
copay?
did have to have a $40 copay.
I figured, yeah. Yeah, usually with the more, longer the words, the bigger the copay.
I know. Well, also a Greek or Latin word in there, and that's going to zap up the price.
That, and the other thing, of course, you got to remember, it's 2 words you're getting. You're just
Yeah.
not getting a 1 word. You're getting a 2-word
Are they,
indicator.
is one Latin and one Greek, or Latinish and Greek, or one Greekish?
I don't know. They're both,
Well, that's
they're both
another
written.
thing. That's another thing.
They're
in the
both
next
written
one.
in English, so.
Well, stochastic
Yeah.
is an English word.
Well, you're going to tell me it isn't. Oh, I don't know.
Well, you're the guru here.
I'm
I'm just a peasant. I'm the guy just showing off his humility.
okay.
I'm damn proud of it.
Well, I would say that trying to get my train of thought back here might be
Mike's
difficult.
caboose. We're in Mike's caboose.
Might be difficult, but obviously prices have gone up a lot, and that's one of the most sensitive indicators for that. And it's rated from 0 to 100, and at the end of the month it was at 91. So 100 is the worst it could possibly mean. So that would tell you that prices are maybe a little bit too high right now.
Well, the technician told me mine was 91 when he put that,
Okay, so you're probably watching. You don't want it to go much higher.
No, I don't. Oh, change my diet completely.
Yeah. The lower the better on that
And,
one. Greed and fear index, you're back, a while ago we were at fear, which is what you want to see. Because when people get afraid after things have dropped, when they're cheaper, we're now into the greed category. So prices might be a little bit on the high side. And,
I can't take this call. God is calling.
Oh, I thought that was Warren Buffett.
No, Warren Buffett, it's usually later in the day.
Okay. Okay. And you hung up on God, huh? Oh.
Well, actually, it wasn't really God. It was one of his angels.
Okay.
Blessings.
Looking for you, or? Better speed dial here, 9-1, and then just hit the final one if
There it
needed.
is. Okay, wait. I didn't put it up in the collection.
Oh, really?
And
Somebody
can
will
we,
wait.
can we get serious
Someone will
here?
be waiting for you
Can
when
we
you
get-
leave
Can
today.
we be serious here?
Yeah. Oh, we want to start? Okay, we will. Major news. News is always serious.
Okay, wait, I'm going to start here. Like it said, Fed rate meeting, no change, labor market, inflation rate declining, getting close to raise cut. That's big. I guess I got it.
He really wants you.
Okay. We're off. Ladies and gentlemen, if you would please disregard that, I would be eternally grateful, or at least for a week and a half. We are, everybody, it's all over that news cut, a cut is coming. How much of that is political? We're not going to discuss that, but, there's an election coming up, and it seems like most of the major institutions want one party to win over another.
Correct.
So I don't know if I'm not accusing anybody of anything. Now, if you want to accuse somebody,
No, I think it's not a surprise of who they want to, Wall Street wants to get in.
Jill Stein,
No, but it's a woman. And
well, that was subtle.
and so I think what we're seeing is a likelihood of a lot of big rate cuts coming up.
I already did. Okay, so we're looking for big rate cuts everywhere,
Right.
except, well, okay, New Zealand, UK got Japan hiked. Why Japan hike? Because that had something to do with that.
I think it did, yeah. Yeah.
So rates are up overseas.
Plus, the interest rates have been like near zero for a long time.
Now, one country that has been on this board, been on this discussion almost every month, is Turkey, and that was for the last few months.
Yep.
It hasn't
Gone quiet.
gone quiet.
Yeah. No news at all coming out of there.
Do we expect to hear anything from Turkey in the next few months?
I think we probably will. We're in September, so it's, I don't think Turkey's on a lot of people's mind right now. But I think as we get the cooler weather sets in, as we get closer to November, middle of November, I bet you hear more about Turkey.
Turkey in November.
Yeah.
Yeah, I've
so.
heard something about.
Okay.
Yeah, okay, all right.
Yeah,
I
yeah.
get that. I think we get that.
And then you can talk about, well, do you like the frozen or the fresh, the organic, the heirloom variety? And, it's a lot of, Turkey is a very complicated issue. It's just not, it's like the United States. It's made up of a lot of different factions. Same thing with Turkey. People think, it's, dark meat, white meat, but not necessarily. There's a lot of other things that come into play.
If anybody at the Turkish consulate is watching this, his name is Mike Carnevale. He's the one, not me. I didn't say any of this.
You just brought it up. Oh, you were talking about the country. Oh, okay.
I brought it up respectfully.
Okay. Well, I think I did too. I mean, I didn't say anything that wasn't.
I think you were giving
true.
that country the bird.
Could be. Yeah, then I'd be tar and feathered probably.
Can we go on? to
Yes,
it?
let's go on. We'll use up the 30 minutes.
Okay. All right. Now, oil. We, as a people, like Berkshire Hathaway. Everybody in the world knows about Berkshire Hathaway, and Michael refers to it this month. It's a non-technology company. Actually, the company itself really doesn't make anything,
Right.
but it has investments. I mean, it does have that railway. What is it?
Southern Santa Fe.
I don't know.
Yeah, I think it's-
They
yeah.
own a big railway, and they own some things, but it's mostly just an investment vehicle.
Right.
And they own a lot of Apple stock, but they have that, I think. But they are a non-technology company and have as you note, a 1 trillion market cap.
Yep.
Now, what does that say about the country in that your big industries, like, say, a Ford or U.S. Steel, which is going down, being thrown overboard by the country, people who make stuff, not trillion-dollar companies.
Yep.
What does that say about the economy?
Well, the $1 trillion thing is market capitalization.
I understand that, but you would think a really hot manufacturing company would.
Yeah,
would
there
top
aren't any
everything.
though.
What?
There aren't any.
And actually, the companies that are hot, does Apple have a $1 trillion market cap? It makes the stuff in China.
It's at 3 trillion.
3 trillion, and it makes its stuff in China. not the
Amazon's
US.
another one. Nvidia's another one. Meta, Facebook is another one.
But well, Nvidia, they
Make the
they
chip.
do make chips, and they make them in this country, I guess. But it's interesting that an investment vehicle is a $1 trillion market cap stock.
Yeah, it is. But a lot of that market cap is, as you had said, is Apple stock, is Microsoft stock, is those
The
type of
railway
things.
too.
Uh,
Okay.
It's not Jordan's, which they do own. It's not those type of companies.
Jordan's.
The furniture company.
Oh, yeah, I know they are.
Right.
Right.
Yeah.
I was just wondering, Jordan. He doesn't mean Jordan. Is Jordan Marsh dead?
I think it is.
What a change from my life.
Oh, well, yeah, Jordan. I mean, think of them all, right? Jordan Marsh, Caldor, Ames, Zaire.
But Jordan Marsh, going into Filene's and Jordan Marsh
was-
in Boston when I was a kid.
Yeah.
In the 50s.
Yeah.
Where, with your parents and lunch and everything. And
Oh, yeah.
that was big. That was nice.
Yep.
Dead, gone.
Filene's, same
Filene's
thing.
is an apartment building. They kept the facade.
Yep.
Filene's basement. That was adventure in itself.
Yeah. Yeah.
Moving right along,
All right.
the economy.
Mm-hmm.
Oh, wait a minute, the science. Root for the Kansas City Royals have made playoffs 9 times out of 55. The following year, the market was up an average of 6%.
Well, we tossed that in because it appears that the Red Sox, it's hopeless now of making the playoffs.
Yes, okay.
And the team right above them is the Royals. So we wanted to see, well, what can we say on that subject? And so, well, let's see how many times the Royals have made the playoffs. And they've only made it 9 times in 55 tries.
But when they do,
The market is
Good
usually
news.
higher the next year.
okay,
So root for the Royals. Because you
I-
can't root for the Red Sox right now.
that's true.
They-
You can root for them, but it's
It appears that it's, I mean,
what's the point?
yeah.
All right, inflation. Yes, mixed
Yeah.
results. To the consumer prices up 0.2%, 2.9% past year versus 3.0 in June. Core, less food and energy. That one the Fed looks up 2%, 0.2%, 3.2% for the past year. July producer prices rose 0.1%. All that stuff says it's still rising. It's just let's have a party because not as much.
Not as it's rising at a slower pace. And that's good.
Well, wouldn't it be better if it wasn't rising at all?
Yep, but it's better than if it was rising at a faster pace.
Okay. All right. We're not going to. All right, leading economic indicators. July was down 0.6%, worse than June, 0.2%. 10 components that give a snapshot of the economy last 6 months at down negative 2.1 prior 6 months. Prior 6 months down 3.1%. Mixed results, 4 up, 5 down, 1 unchanged. The largest component work week was negative. Second biggest consumer expectations also negative. Fifth straight negative month, odds of recession increase after 3 straight negative months. We've been talking about that, and the official declared recession never happens.
Right.
What's your take?
I think if you look at these indicators, there is no recession. And if you look at this, in addition to looking at jobless claims and job gains, it kind of plays into that there is no recession.
Okay. Now we get to the jobless claims and employment report. Latest 231,000 versus 234 a year ago. 4-week average 231,500. 250,000 job losses. It hurts the economy.
Right.
Versus 250 a year ago. Long-term unemployed 1.9 million versus 1.8 a year ago. July, the employment report saw non-farm payrolls up 114,000. 43rd straight monthly jobs gained. Not enough to help the economy. Economy needs 150 to grow. Healthcare and construction led the way. Manufacturing gained jobs. Technology lost the most. Labor force rose by 420,000. Wages 0.2% up. That's up 3.6% over the past 12 months versus 4.8% in June. Unemployment rose, highest since October 2021. Now, before the show, I sent something to you
Yes.
that says all this cheerful stuff, and not all this cheerful, but it's, we do need 150,000, but at least it was up 114,000. I sent you something said that a lot of this is ragtime, in that major downward revision report of a business website, IMG, major downward revisions to U.S. jobs is pushing the Fed to act. The Bureau for Labor Statistics has acknowledged that its non-farm payroll estimates were above the levels shown by tax records to the tune of 818,000. So rather than adding 2.9 million jobs in the 12 months to March 2024, there are only 2.1 million new jobs. This means the labor market momentum is being lost from a weaker position than originally thought. Now we go through these statistics every month, and it always sounds like we're going ahead. What do you take? What's your takeaway from this?
Okay, so the employment report, those numbers are just estimates.
So we should be saying every month, there's only an estimate.
Well,
We can, we don't have to, but we
we can. We don't have to. I think if we look back, every jobs report has been revised. Some months they get revised up, some months they get revised down.
Basically, they're usually down.
Yeah, but I mean, it can go either way. And I think the thing to look at is more on any of this stuff is it the trend rather than the exact number. And I think the fact that they did this, it says major downward revision. I don't know what constitutes major or minor, but a downward revision, right? I think
That's a big downward revision.
yeah. I mean, we'd have to see what it was in prior months and prior years, their revisions to, because that could be somebody who's got a certain opinion and will say, you know, downward revision, that doesn't sound too good. Why don't we put in the word major? That doesn't sound like it's really bad. So you just don't know. But they get revised either way.
So you don't think it
Every
was
time.
a major downward revision?
I don't know. You'd have to look at what.
Oh, I'm looking at it right here.
Oh, yeah. They're saying this one was.
818,000.
How was that in comparison to prior years? But the fact that it's saying it'll push the Fed to act and things are not as rosy as they are alleged to be, I think we have been seeing that in some of these things over the past couple of months. Certainly with that July employment report, although it was up and, you know, the positives would say, oh, 43 months in a row job gains. The negative of that, it was one of the smallest job gains, and it wasn't good enough to keep the economy on an even pace. So I think, yeah, the downward revision and the fact that these employment type reports were negative, were down, are causing the Fed to cut interest rates. But also I think what's causing the Fed to cut rates is other central banks are cutting rates too.
So when you say other countries, how does that make our Fed want to? Are we in competition with the other?
Yeah, oh yeah. So I mean, I think things are slowing down, but I don't think there's anything in any of these that is shockingly bad.
818, well, it depends. Well, whatever you say about Mike, he defends his position well. Ladies and gentlemen, we all pray that he will find his clipboard by next month.
I'm going to look for it.
Mike Carnevale, thank you very much for coming. This is Richard Wilco. See you next month.